The Foreign Account Tax Compliance Act, which is also called FATCA, is a 2010 United States federal law requiring all non-U.S. foreign financial institutions, also called FFIs, to search their records for customers with indicia of a connection to the U.S., including indications in births or records of birth or prior residence in the U.S., or the like, and report the assets and identities of such persons to the U.S. Department of the Treasury. The reason I'm reading, I'm pulling this out of Wikipedia. It's the law dealing with FATCA. The reason I bring this out to a lot of people is there's people that have relinquished their U.S. citizenship and are living outside the U.S. But the problem is they might not realize this, but when you leave the U.S. and you no longer have to file your taxes, according to FATCA Act, they're still required by law if you have been born in the U.S. And obviously anybody's going to know that because on your passport, whether it's a different passport in the U.S. that you have now, it's going to show on there that your new passport, which is the second passport, will show that you were born in the U.S. So they know if you were born in the U.S., at one time you were a U.S. citizen. So they have to search their records for people who were born in the U.S., whether you're a U.S. citizen or not anymore. And they also have to research anybody who's ever lived in the U.S. So even if you're not living in the U.S., you're no longer a U.S. citizen. If you've ever lived in the U.S., they're supposed to report those forms, or your financial accounts, to the IRS. And the reason I'm telling you this is now the IRS can go back 6 years on audits. So even if you've left the U.S., you could have an issue all the way up to, they really can't get anything on you up to 10 years, even on a fraud matter. They can extend beyond 6 years if a matter is pertaining to fraud. Technically, they can't go back more than 10 years, even on a fraud case. There is one case that went back 30 years on a payroll deduction. It's the only one I've ever heard of before. But technically, I've never heard of a case where they've gone back more than 10 years. But the reason I'm saying this is the fact that even if you've relinquished and you're living outside the U.S., these FFIs, they're obligated still to turn in financial records on you, even if you don't have a green card, if you're not a resident of the U.S., and you're no longer a U.S. citizen. And so you need to get past that 10-year period if there's a discrepancy. And that's why I say if you're thinking about relinquishing, get past that 10-year period, because it looks to me like the FATCA is obligated. If you were ever a U.S. citizen, if you were born in the U.S., you were a U.S. citizen, or if you were ever a resident in the U.S., then they have to forever turn in these forms to the IRS, even if you've gotten out of the U.S. and you've relinquished your U.S. citizenship. A lot of people get confused because they think if you're no longer a U.S. resident, you don't have a green card, and you're not a U.S. citizen, those records won't be turned in. But that's not according to the law here dealing with FATCA. And also, I would tell you, too, I see so many people that get second passports, and they're not doing it with countries that have territorial tax systems or pure tax havens. You need to stick with those type countries. Don't go from one problem into another one where you're getting citizenship in a country that taxes worldwide income if you live there. And you might say, well, I'm not going to get resident in this country that I got taxes on, that I'm not going to get residency in this country that I'm getting citizenship in. I'm just getting the passport. Well, the problem is if you end up moving there, because I see a lot of people that end up moving to the country that their passport's in, because you get a lot more rights and easier to work. There's a lot of benefits from that. And that's why I say, do your research. Go with a country that has a territorial tax system or pure tax haven. When you get your passport, don't get one that taxes worldwide income, because if you ever move to that country, they're going to tax you to death. And the problem is now all these countries are joining the CRS and Common Reporting Standard, almost all the countries are enrolled in this. There's over 100 that are enrolled in it where they exchange tax information now. And that's going to eventually be probably every country in the world. The only two countries I know right now that's not signed on in FATCA are North Korea and Iran. So, there's no escaping that. And what a lot of people are doing now is they're relinquishing their U.S. citizenship. But remember, there's a look-back period of 10 years. Because all those records are forever turned in by FATCA if you were born in the U.S. or if you were ever a resident of the U.S. So these are things you have to think about that a lot of people don't, consider. Anyway, if you got a question or comment, put it below. Also, we deal with 67 citizenship by investment and residency by investment countries all over the world. We like St. Kitts quite a bit because it has no income tax, no capital gains tax, no estate or inheritance taxes. You have visa-free the Schengen countries, and it's one of the few places in the world you can. There's no income taxes even on real estate rental income, and it's actually fairly inexpensive to live in St. Kitts. But if you're interested in getting your taxes to zero, close to zero, contact us. There's a questionnaire you can fill out at the top of the website. You can pull that up, fill that out, send it in, and we'll be glad to get back with you. If you want new videos as they come out, just hit the subscription button to the right of your screen, and you'll get new videos as they come out. Look forward to talking to you on the next video. Take care.